right, let's get started. So we're going to go over swing trading today, swing trades. This was another session that you guys came up with as a suggestion. So we put it in and we're going to go over it today. So basically, there's different definitions depending on who you ask as to what a swing trade is, like what the time frame is. So, you ask, a lot of times I say if you ask 10 different traders, you might get 10 different answers. But what I think of as a swing trade is, number one, it's not an intraday trade, so you're not buying and selling it on the same day. That's a day trade. And it's something that you're not keeping over a year, which, is going to be more of a longer hold trade. But that's what you hear quite a bit. If it's a long hold, it's over a year. Day trade is obviously intraday. Whenever I'm looking at swing trades, I'm not looking to hold that thing for 6 months or 7 months or even 3 months. Usually my goal in a swing trade is to not hold it longer than a few weeks. And a lot of times, if you take the right setup, you can get out of a swing trade in just a few days. So, you can look at it as, you can categorize it as, a short-term swing trade or mid-term, medium-term, long-term, however you want to look at it. But a lot of people will still consider a 6-month or 10-month trade as a swing trade. Well, to me, that's more of a longer-term hold. So that's pretty much what a swing trade is when you're looking for swing trades, you're looking at higher time frame charts when you're looking to pick up swing trades. You're looking at the weekly sometimes, definitely the daily, maybe even checking out the 4-hour, and then checking out a little bit lower time frame chart. Once you've identified a swing trade that you're looking at taking, then on that day when it looks like that's the day you're thinking you're going to be able to pick up that swing trade, you might take a look at the hourly chart, which is what I typically do. And we'll go over some examples of that. So when you're swing trading, I don't recommend, some people do it, but I don't recommend swing trading against the trend, right? So what does that mean? So when we're looking at the daily chart, so let's take this Sava, for example, here. When we're looking at the daily chart, this area here, hold on. I'll turn my thing on 1 second here, guys. All right, so should be working here now. So if you can see here, we are trending up, right? So that's what I mean by not going against the trend. Because some people, when they swing trade, they're swinging short, right? Some people are swinging long. On swing trades, I don't recommend swinging against the trend. Day trades, it doesn't matter because we're getting in and out of the trade so quickly that going against the long-term trend is not that big of a deal. So that's one thing I don't recommend. So go with the trend when you're swing trading on that particular stock. And what I like to look at, my favorite time frame to look at when I am looking at swing trades is the daily. I will check out the weekly sometimes. You can find setups on the weekly as well. But I like to look at the daily. And then I like to use the 1-hour chart typically for my entries. And I'll go over that with you on a few examples. I found actually two decent examples on different types of swing trades. So what are we looking for swing trades, right? Why are we taking them? Well, there's several different ways to pick up a swing trade. You can look for chart patterns, just like we look at on when we're day trading. You can look for triangles, wedges, flags, pennants, whatever you want to be looking for, whatever your favorite chart pattern is. You can look at those on a daily chart, on a 4-hour chart, on an hourly chart. Just like you can on a smaller intraday chart that we usually trade off of, which is 1 minute, 2 minute, 5 minute, whatever you guys are using. So you can look at chart patterns. you can look at basically just trading the swing trade, the trend, okay, on a daily or a 4 hour chart. And I'll give you an example of that as well. And then there's another one, it's kind of one of my favorites, is I call it dumpster diving. So you're finding these stocks that have just been pummeled, right? They're down really, really hard, and they're down for a good period of time, whether that may be a month or 3 months or even 6 months to a year maybe on some of them, right? They've just been really beaten down hard. And you're basically those types of trades, you're not just hopping in solely because they're down and solely because they've been down for X amount of time. You're looking for signals that we're starting to see some recovery off of that stock, and I'll go over a couple examples on that as well. The good thing about when you're dumpster diving looking for swings is number one, whatever bad news it had or whatever it was that made the stock go down, we're not talking about Chinese IPO stocks that the only reason they went to $80 is because they're super low float and they were a Chinese IPO and now they're big time down. That's not the type of dumpster diving that I'm talking about. I'm talking about, they're down for a reason. Whether it be really bad news, like with that SCSN when it got the CRL. They're down with really bad news, but eventually they start, possibly start to see some recovery. So a couple of good things about that is number one, usually when they've been down for a long period of time, most of the bad news is already baked in, right? And if they've been down for a long period of time, most of your sellers, they've already sold, so a lot of times, you can see clearly that you're at the bottom, right? Because you've been at the bottom forever, and it's just kind of tick-tocking around on that bottom level. So there's less downside on those swing trades, and there's more upside potential because they're down so big, right? So the only negative thing, well, there's more, but one of the main negative things about dumpster diving is that you could possibly end up having to hold that swing trade for a longer period of time. So keep that in mind if you're looking at dumpster diving stocks. Some other things that people look at when they're looking to pick up a swing trade is they're looking at institutional or hedge fund investments, right? Maybe over the past few quarters you've kind of seen that this particular hedge fund or this particular group of institutional investors have been accumulating some shares in that particular stock. Well, they're typically doing that for a reason, right? That's smart money. They're expecting for it to obviously go up for whatever reason. But also keep in mind too that some of these hedge fund investors or institutional investors, part of their strategy is they have X number of clients that say, well, hey, I want this percentage of my investments to go in riskier stocks. Well, that could be the case as well. So maybe there's not necessarily anything coming up on it. Maybe that's just where they're putting some of their money based on, they feel that that's, even though it's a risky investment, they feel that that's, looks like a decent risky investment. So keep that in mind as well. And then also looking for insider buys. In my opinion, there's a lot of reasons that insiders will sell stock. They're selling stock because they just, they need extra money, or they're building a new house, or whatever the reason may be. But most of the time, they're buying. There only one reason that they're buying, and that's usually because they obviously have the expectation that in the near future that the stock price is going to go up. So you don't want to base your trades off of institutional purchasing or insider buys, but it's another thing to look at that can give you just more confirmation. And we'll go over some different indications that we can kind of all match up. Everybody by now should know how big I am on trying to get a lot of different indications and put them together that are all nodding their head saying, yes, this looks like a good opportunity. So those are some things that you look for, that you can look for. Some people are really only looking at swing trading the bigger stocks because they feel like they're safer, like Apple or Tesla, Sony, Netflix, those type of stocks, because they just feel like they're a lot less volatile, and they're just stronger stocks. So some people will only swing trade those types of stocks. Not necessarily me. I'm usually swing trading the stocks that we typically day trade, right? I'm not necessarily looking for only those bigger stocks, because keep in mind, if you want to swing trade some of those bigger stocks, like Sony trades around $100, and if you want to swing trade that, in order for you to make any sizable profit on it, you have to really put in a pretty big position, and that can tie up a lot of capital over a period of time, depending on how long that swing trade is, that you could be using otherwise with day trading, or somewhere else, smaller stock swing. So that's one of the reasons that I stay away from them, just because they are less risky, but again, they just ties up so much capital. But if you have tons of capital to play with, you might take a look at some of those bigger stocks, because they do get quite a bit of attention with swing traders as well. Okay, so let me talk real quick about. Let me get to a different chart here. 1 second, and I want to go over a couple of different things that I like to look for. Let me get to this chart here where I can kind of draw on it. May not work. One moment, guys. Okay, so one of the patterns that I like to look for is on swing trades, I like to look for triangle patterns. There's a lot of different patterns out there. You can look for whatever you want to, but I like to look for triangle patterns. I'll show you an example of one that I found this morning that we can look at. So let me just show you guys what I'm looking for here. So you have 3 different triangle patterns. You have ascending, descending, and symmetrical, right? So your ascending is just going to look like this. The top line is going to be, I'm not going to be able to draw that straight because I'm doing it on a trackpad, but the top line is straight, and then your bottom line is what is ascending, right? So basically the stock is doing this. It's coming up here, it's hitting resistance up here, coming back down, hitting trend line support, coming back up here, hitting resistance again. So it's making higher lows, but it's not necessarily making higher highs. So that's what an ascending triangle looks like. It might be easier if I draw it with a regular trend line. So let me just do that. A descending trend line is exactly the opposite. So it's going to be flat on the bottom, right? And then here on the top, it's going to be descending, okay? So it's going to look more like that. So you have basically the stock is hitting support down there, but it's making lower highs, okay? So that is a descending triangle, right? And all these triangles, they'll intersect at some point, right? So that's what these triangles are doing. They're going to intersect. And obviously ascending is bullish, because it's making, even though it's not making higher highs necessarily, it's making higher lows, right? And with a descending, it's not really making lower lows, but it's making lower highs, okay? So this particular one you're seeing on the screen now, descending, that is a bearish pattern. Okay, let me get rid of that. And a symmetrical is just what it sounds like. I'll show you what a symmetrical looks like. Symmetrical just looks symmetrical. So neither bottom or top lines are flat. It's just symmetrical, and this is what this is going to look a little bit funny, but this is what your stock will be doing. And what it's doing is, you can see it's pinching down and getting smaller and smaller. Okay, so once that starts pinching down, then you're going to be looking for a breakout in either direction. So a symmetrical triangle is neither really bearish or bullish, but it's likely going to go in one direction or the other. And you could see a breakout in one direction or the other. Really nice, nice thing to look for. The only thing is you have to wait for confirmation to see in which direction that it's going to go. And I'll show you an example of one that I found this morning with a symmetrical triangle. Okay, so I'm going to dump these real quick. So those are some things that I like to look for based on what type of patterns you guys like. You guys can base your swing trade off of whatever pattern that you feel comfortable with, whether it's a flag pattern on the daily chart, or just basically just an uptrend and you're looking for a swing low bounce. Just me personally, I like triangles. I like other things as well, and there's a lot of other indications that I look at, but I try and look at triangle patterns. Once you get to where you've seen them more often, you'll recognize them easier. You'll recognize them with the naked eye versus having to always draw the triangle to see, if in fact it is a triangle pattern. You'll get to where you can recognize it, because it's pretty easy to recognize. It's when you look to the left, it's pretty big and gapped, and if you look to the right, it's the price action is getting smaller and smaller and smaller. So pretty easy to recognize once you do it a few times. So I'm going to give y'all an example here. Let me pull this off. Put my other one back on here. So this is pretty much what my when I'm looking for swing trades, this is what my my swing trade chart setup looks like. So I have a weekly chart here. Let me turn my handy dandy tool on. So this is my weekly chart here, and this is going to be my daily chart here. And over here I keep a 4-hour chart, and here I have an hourly chart. So what I'm looking for on these different charts is I'm looking for either on the weekly or on the daily. I'm looking for setups, right? We're looking, since they're swing trades, we're looking at these larger time frames to look for setups. So looking at the weekly and or the daily for setups, and I'll usually look at the 4-hour for maybe confirmation of a certain setup, or just to see what it looks like, or maybe even looking for setups on the 4-hour sometimes. And then usually what I'm using the 1-hour for is I'm using that for when I see that the setup could happen today. Then I'm looking at the 1-hour chart for entry of that particular swing trade, and I'll give you an idea of what I mean by that. Okay, so let's look at Sava here. Let's see. Let's look on the 1-hour. For you guys that use Thinkorswim, I'm sorry about the audio, guys. I'm not sure what happened there. Everything's back and working now, though. Okay, sorry about that. I don't know, maybe when I switched that chart over, maybe it messed everything up. I'm not sure. Sorry about that. Okay, so did you guys get to see what when I showed the different triangle patterns, what they look like? Were y'all able to see that? That may have been what you guys missed. Okay. I'll do it again. I won't switch that. I'll just change this here. All right, let me switch this to let's go. It's all going to be flex here stuff. I don't know if I can. Okay, well, let me just draw it. Let me blow this up here real quick, where I can have a little bit of room to draw. maybe you guys missed that. So what I went over is I went over 3 different triangle patterns that I look for when I'm looking at swing trades sometimes. It's one of my favorite patterns to look for. So you have 3 different triangle patterns. You have ascending, descending, and symmetrical. So the ascending is a bullish chart pattern. And basically it looks like, let me just draw with a trend line, will be easier. Let me make sure I'm on trend lines. I'm not. So the top of the pattern is going to be flat. This is on an ascending, okay? And the bottom is going to be the ascending part, okay? So it's going to be going up. So basically you have a stock that is doing this, right? So you are not making higher highs necessarily, but you're making higher lows, okay? And what you're looking for is for this to break out. Once it pinches down there, as you can see, the price action is pinching. Once it pinches down there, then people are looking for a breakout to the upside, okay? That's on an ascending triangle. A descending triangle is obviously exactly the opposite. I'll draw that for you real quick. So an ascending triangle is where basically the bottom of the triangle formation is flat instead of the top. And then the top is the one that is descending, okay? So it's descending. And then you have, obviously, your price action is doing this. It's not necessarily making lower lows, but it's making lower highs, okay? And this is a bearish pattern. And once the price starts pinching, people are looking for it to break to the downside. Okay, so that is a bearish pattern. The third type that I'm looking for, and obviously that descending, you would be looking for that if you're looking to go short, not long. The third is called symmetrical. And what that is, just like it sounds, you basically have a descending top and an ascending bottom. So it's basically a symmetrical triangle. And your price action is ticking like this, okay? So you're actually making lower highs and you're making higher lows. But once this price gets down to where it starts pinching, right, it starts getting tight, this one is neither bearish or bullish. It can break out to either side. So that's what you're looking for. You're looking for confirmation as to whether it's going to break out to the upside or if it's going to break out to the downside. So that's what you're looking for. And I have a good example of that symmetrical triangle that I found this morning that I'll show you guys here in just a few minutes. So the first thing that I want to show y'all is this Sava. Get back to restore my cells there. And by the way, if you guys don't know, on Thinkorswim, whenever you have several charts in one grid, you can just right click on on whatever chart you want to maximize, and you can hit maximize cell, and you can look at that chart, on full screen. And then when you're done, just right click again, restore cells, and then boom, you're right back to your normal trading chart screen there. Okay, so let's look at Sava here, and we're going to talk about, Sava is a decent example. I just found it a little bit ago of when you might be taking a look at a stock when you're swing trading the trend. Okay, so let's look at the 1 hour chart here. Okay, so a really good example right here. Let me dump this. Okay, so what we're doing is we are uptrending, right? So we want to try and trade this trend. We're trending up, making higher lows, and we're looking for a possible breakout, right? So we're going to trade this trend. So what are we looking for? We are looking for a bounce off of the swing low, right? And this is on a 1 hour chart here. So let's zoom in to this area here and see if we can find an opportunity for a trade. So what I'm looking for on these is I'm looking for a solid pullback to give us a swing low. You're not looking for just a one candle pullback, because a lot of times basically that's just basically like a hesitation or a pause, and then still the continuation of that particular move that hasn't pulled back yet. So I like to look for a good solid pullback. I think you guys have heard me say that many times in the channel, that I'm looking for more, like a 2 candle pullback instead of just waiting for one, even when we're, day trading. So same thing here. So what we're looking for is we're looking for this low. Let me get to my other drawing here, and I'll show you what I'm talking about. I'll draw this in a rectangle so you guys can recognize it pretty easily. So I would call this a definite pullback, right? We pulled back all the way to here. So we take the body of the candle, the bottom of the body of that particular red candle, right? And then we draw to where the bottom of that wick of that green candle, because that when it was down at that level, that candle was red, right? So it's still part of the pullback, and then we stretch it on out a little bit. And then what we're looking for here is we're looking for it to bounce out of there, right? Tick-tock a little bit, come back down and retest that support area, which was right here, right? All where that red is. And where did we see the retest? We saw it right here, right? It doesn't matter that the body of the candle didn't get back down into that retest level. Even if you have a wick, that's perfectly fine. It's actually better to have a wick because you see that it got bought back up in that support area. And then we wait for confirmation green candle following that. So this would be an example of a swing trade that you would take, one here, that you would take off of just swinging the trend. And let's see how long this particular swing trade would have taken. So here's where we would have gotten in right here, right? And that was on Monday. And then by, you could have taken profit, you could have scaled out anywhere you wanted to in here. And then you could have, if you did get the top somewhere up there, hey, good for you. But you could have gotten out anywhere. But anyway, all the way to the top, it looks like that happened on Thursday. So it would have been a 3-day swing trade, which are the ones I really like. The ones that are nice and fast. So that's a good example of where you're actually just swing trading the trend. Okay, let me show you an example of where you would swing trade a triangle formation. It was on which one was that? It was PDSB that I found this morning. B. Okay, this is a pretty good example of when you actually find a triangle to trade. So I found this triangle on the daily chart, so I'm going to maximize this daily so we can take a look at it here. Okay, does anybody see a triangle here? Sometimes it can be a little bit more difficult to see with the naked eye until you draw your trend lines. But like I said, once you get used to seeing them, you can kind of spot them right away. So I'm going to draw them for you here. So we had, and all you're doing here is just like our previous sessions. You're just drawing trend line support. Okay, this is all you're doing. Get this right here. And keeping in mind that when you're drawing these triangles, or when you have a triangle pattern, basically that triangle pattern, it's going to intersect, right? You can see that as it's coming down here, it's going to eventually intersect with this line. So basically your price action is getting tighter, okay? See how it's getting tighter there? And look at what happened once it broke the that symmetrical triangle resistance, the trend line resistance up there. It went up and made a nice rally. So you guys have heard me say many times that we want to look at different indications. Okay, so other than this being a symmetrical triangle and it broke to the upside, what other indications do we have that this was a good trade? Do we always want to just take a trade every time we see a symmetrical triangle that it breaks to the upside or breaks to the downside? No. We want to look at other indications, because the more indications that you can have that are saying, yeah, that looks like a good trade, then the more likely the trade is going to be favorable for you, right? So first thing I can tell you about this is, number one, we're trading above the 50 and the 200 EMA, right? That's good. I typically don't like to go long on anything that's trading below the 50 EMA, and especially the 200 EMA, right? So those are two things that we have going for us. We're trading above the, where we would take this trade, which would be right here on this confirmation candle break here, right? We're above the 50. This red line is a 50 EMA, by the way, and this orange line is the 200. So also, what are we looking at? Well, let's take a look. Do we have any support down there? We want to look at support as well. Do we have any key support areas? So let's take a look. Do we? So we had a bounce here, a bounce here, a bounce here. So right about this 916, 917 level, we have support, right? And let me show you. So we had support in this area. It held resistance right here. You guys see that? See this doji candle here, or almost doji? And it held not support, but resistance there, right? That 916 level. So it showed resistance there. It showed support here 3 times, right? Showed support here all through here again. See, 1 time, 2 times, 3 times, 4 times, and then pretty much support here as well. Because keep in mind, this is just an area. It's not necessarily right on that exact number. But we can say, keep in mind, this is the daily chart. That we're not looking at a 1-minute chart here where that's just kind of support. This is daily chart. So that's a very key support level area, that 916, 917 area, right? Okay, so that's another indication that we have going for us. Not only did we bounce here at trend line support, but we also, in that same area, we had some key support. So this would be another nice trade where if you took it here, your downside is not a lot, because all you're doing is you're just getting a little bit below. You're putting your stop loss a little bit below that key support, hoping that it's going to hold. And what I would do is I would put my stop loss. Let me show you guys where I would put mine. Is I would look at the bottom of this previous candle, and I would put it a little bit below that, right? As long as it falls within your risk management plan, of course. But that's where I would put my stop loss. That way, if it did come down for whatever reason and broke that 916 support level like it did here, you wouldn't get stopped out in the case, and it eventually just rallied back on up, just like it did right here, right? Or if you wanted to be a little bit more risky, you could put it down here at this previous nasty red candle that happened way back then. But that likely would be, it would probably decrease your share size amount to put it that far below that key support level. But anyway, that's where I would be looking to put mine, and just wanted to point that out to you guys. So what other things do we have in our favor? So far we're trading above the 50 and the 200 EMA. We've bounced and held a key support level, right? That 916, 917 area. And now we also broke the symmetrical triangle, the trend resistance, right? So we broke this trend resistance, another positive indication for us. Let's take a look at when we broke this resistance. Let's take a look at where our MACD was, right? Well, if you look right here, we broke it right here, so MACD was here, and look what we had with MACD. Nice signal cross right there, right? So that's another indication that we're looking at that says, hey, this looks like a good trade, right? We have lots of different indications showing us that the trade looks good. So we can even look at some more indications. Let's see, let's take a look at, because this is the daily chart, don't forget. So let's take a look at the hourly chart, because we would be taking this trade on the hourly chart. We likely wouldn't take the trade on the daily chart, right? So we're going to be looking to take this trade. It looks like around, I don't know, 1150 or whatever, wherever you wanted to take it. You could even take it higher than that if you wanted to wait until that confirmation candle finished. But most of the time, once you see that we're above you've looked at all these indications. Well, now, hey, this is the day right here that, because keep in mind, each one of these candles represents a full day. So this is the day right here that we would be looking to take this trade, would be right here, right? Yeah, could you be more risky and take it here as soon as you bounced? Sure. Or take it here? Sure you could. That's totally up to you guys. Okay, so let's take a look at the hourly chart where we would actually take the trade. So here's our hourly chart. Let's maximize this guy and see what's going on the hourly chart where we would actually take the trade. So where do we break that trend line support? So, if you look at, this is why we draw these things on the larger time frames. If you look at this hourly chart, this is our triangle here, but it makes no sense, right? You're like, what? Wait a minute, why'd you draw it? It just looks like a couple of like trend support, right? Trend support on, trading sideways. But that's why we draw it on those larger time frames. So we saw the break right here. So what do we want to look at on the break right there? Well, let's look at a couple of different things. First of all, let's look at the volume. Let's see what's going on with the volume. Y'all all know I'm huge on volume. I don't know what happened there. There we go. Okay, so let's look at volume. What started happening with the volume after this break? So look at the volume down here, where we are, probably an average level, maybe right there, or maybe a little bit lower. Maybe like right here is our average level. Well, look at the volume started coming in this area whenever we started breaking that. So what does that tell us? That tells us that other traders are playing that move, right? Other traders saw this setup. They're waiting for it to happen, and as soon as it starts happening, then they're hopping in the trade. So another indication that the volume. Can anybody else see another indication that's pretty obvious on this chart with the moving averages? Just want to give you all a second to, just from our previous sessions, you guys should be able to recognize something else significant that happened right around our entry level with the moving averages. So the 50 EMA crossed the 200 EMA. You guys see that? Right here, right? So here's our 50 EMA, this red dotted line. And you see how it crossed up above the orange line, which is the 200 EMA? Right there at our entry level, right? Or right where we would be looking to take the swing trade off of the daily chart. So that's yet another indication that, yeah, this trade looks good. And if indeed you did take this trade, and here's where you're kind of looking at it more on day trade terms. When you dial down to this 1 hour chart, you're looking at it more on a day trade term. So you're maybe waiting for a pullback, maybe looking for good volume going up. Still, it's going to be a swing trade, but now you're kind of looking at it a little bit more on a day trade perspective because you're looking at your entry, right? You want to also try and get the best possible entry because, if you just hopped in on the daily chart and then on the 1 hour chart, it pulls back, 75 cents or 80 cents or $1.50, whatever, that's extra profit that you could have booked, right? So we had a lot of different indications on this particular trade. And this all happened here very recently. And so if you took the trade somewhere around here, in this area here, it would be, let's just call it $12, right? Well, you'd have made almost $3, which is a pretty good deal. 2,000 shares, almost $6,000 on a Tuesday, Wednesday, Thursday, on a 3-day swing trade. So that's a good example that I found this morning of a triangle trade, and specifically a symmetrical triangle trade. Okay, let me turn this off. All right, we'll get back out of here. So, like I said, there's several different ways that you can look at these trades. I can show you an example here on the weekly chart on this same stock of a dumpster diving trade, right? So you can see that this thing at one point, obviously, since the 200 EMAs up here, was much higher at some point, right? And this thing has just been in the dumpster, look, for how long? I mean, just forever. It was way, way down, way down, way down. And then here's where we saw this trade happen, right here. You can see my my triangle there is kind of tiny because we're on the weekly chart now. But this would be an example of one that you're looking for some type of setup on a dumpster diver. This thing is just what's your downside here? Once you've been down this low, this isn't a great example on the weekly chart because obviously it did go down to 62 cents, and then there's a big difference between there. But I'm talking about just looking at the actual formation. You can see the candles. You're just staying low for a really long period of time. So, and typically when you see that, there's just not a ton of downside to it, right? Because it's been trading in that area for so long. What's the likelihood of it getting any lower, right? And it's built lots and lots of support at that area because it's been trading there for so long. So I didn't look for a good example of that simply because they're pretty easy to find. If you're looking for dumpster diving trades, you're obviously looking for trades that you're looking for stocks that are hitting 52 weekly. You can set up scanners for stocks that are down X amount over X amount of days. They've hit 52-week low, however many times over the past few months or whatever. You can set up scanners for that. And other websites you can look at where they have, gappers and crappers, the ones that have been doing well and the ones that have been doing terrible. So you can easily find those types of stocks. But just because it's down doesn't mean that it's going to be a good swing trade. I see a lot of people saying, well, hey, I'm going to swing trade, such and such because it's, man, I've never seen it this cheap, or it's down so much. Well, you really need to do some more investigation to figure out why, or find out why it's down so much, because sometimes what ends up being the bottom ends up not being the bottom, right? Or what you think is the bottom ends up not being the bottom, and it goes down and makes a lower low, like we saw with that, or for a long time we saw with that EJH. Everybody was looking for that particular stock to make some type of recovery, and man, it just kept almost every day it would go down and make another 52-week low. So just because it looks cheap doesn't always mean that it won't get cheaper. Guys, I'm gonna pause this for just 1 second.